Hi, I'm Jesse Baines with Yahoo Finance Canada. You're watching Editor's Edition. Today, we're talking about real estate during COVID-19, which has, at least in the country's two biggest markets, been on a run even the most hardened bulls likely didn't see coming. Today, we're going to be joined by our guests, Realosophy Realty's John Pasalis, he's in Toronto,
Thanks for having me.
and Oakland Realty's Steve Saretsky joins us from Vancouver.
Thanks for having me on.
Thanks for coming. So back in late May, I asked you guys what you thought would happen during the pandemic. You'll recall I put a bit of pressure on you to give me some sort of forecast, some sort of prediction. Here's what you had to say back in May.
I mean, I can't guess. I'm not going to guess because it's really unpredictable. I mean, the reality is, I mean, there's like, as you sort of opened up this segment, there's the pessimistic clips, you know, the predictions from CMHC that say, okay, prices might go down 80%. There's the sort of more optimists, which are prices will not go down. And I'll be frank that both are possible. And I don't know which one's going to, because a lot of this depends on how our economy responds to this in the fall market. How many jobs are still there? How many people need to sell? I don't think a decline in demand is enough to push down prices in Toronto. Like, we need to see the supply side shocks. And that happens when, you know, there's a big spike in unemployment, people can't keep their homes. And that part of it is really hard to predict. So it's very hard to say what things are going to look like in 6 to 12 months.
I'm obviously very skeptical about making predictions, but I will say this is I think that I like to weigh things in probabilities, and I think that the probabilities to the downside are significantly higher than the probabilities to the upside. So that's how I'm kind of looking at it. I think that, again, as John mentioned, I think a lot of this is predicated on the number of new listings coming to market. I'm certainly seeing that now, as we're seeing that in the condo market, is the amount of supply that is starting to build is putting downwards pressure on pricing. I think that we are seeing a ramp up. We should see record high completions of new condo supply this year and into 2021. So I think that that's a little bit of a headwind as well. That a lot of that inventory should come on the market. Now, again, the key thing is should. In the detached segment, again, what we're seeing right now is just very few people interested in listing their home. So again, there's so many variables and so many factors. I mean, you know, typically, people that own these detached homes are generally speaking older people, and they're a little bit more cautious about letting people in their homes. And so again, a lot of it kind of depends on the trajectory of the virus too. Like, in the fall or the winter, are we going to get a potential second wave? And if so, does that mean, again, that new listings will contract again? Or does the virus kind of subside and we start to get back to this normal trajectory, and this wave of deferrals start to expire, and then we have to kind of work with those? So I think there's a lot of questions that we probably won't have answered until the fall, and that should give us a better outlook.
All right, so let's start with you, John. When you see that, when you hear that, what goes through your head?
You know, at that time, 100%. I mean, no one could have predicted what's going to happen, and I do think that's exactly what happened. I don't think anybody that I know of would have predicted that the market, the housing market in the GTA, would have recovered the way it did. I mean, that's probably the one forecast that, you know, we weren't hearing 4 or 5 months ago. I mean, most of them were about a market cooling down, slowing down, and prices falling, and it's done the complete opposite.
Okay, and Steve, how about you? What's going through your mind as you hear that?
Yeah, I think it just kind of shows how difficult it is to predict human behavior. I think that what happened was there was a sense of urgency or desperation about getting out of your existing home. Maybe it was too small and you felt like you needed more space. And I think it was hard to predict, obviously, that, you know, people would put that foremost. Like, there's people that obviously were upsizing, so increasing their debt loads, increasing their liabilities, obviously in a deep recession. So that's hard to predict. But again, obviously, people put a huge emphasis on shelter.
Okay, so CMHC was willing to make a prediction, famously predicting a fall in prices between 9 and 18%. And July were strong months. Here's August national numbers from Korea. I mean, August was a blockbuster month to say the least. How's that prediction looking now from CMHC? John, starting with you.
I mean, very, very far off. I mean, they predicted that both sales and house prices would be declining towards the end of this year. And the exact opposite has happened. I mean, sales are rebounding significantly. Prices are up probably around 7% above what they were at the beginning of the year, and they were predicting they'd be falling. So again, the market's moving in a completely different direction from what CMHC had forecasted, and there's basically zero chance that prices and sales are going to end the year down. I mean, what happens in 2021 is anyone's guess, but certainly their forecast for 2020 is looking pretty off right now.
Steve, what's your take?
I mean, I think it's, as John kind of mentioned, I think for 2020, it's a bit of a write-off for CMHC. I mean, don't get me wrong, there could be a decent correction here in 2021. I wouldn't rule that out. I'm sure we'll get into the depths of that conversation further down the road here. But I think the only issue that I take with CMHC's prediction, I mean, it's quite interesting for them to come out with such an aggressive statement, considering that they control the entire, Canada Mortgage and Housing Corporation, right? So the issue that I have is that they kind of jammed it down everyone's throat, and I think unfortunately, a lot of the public took it that at face value that, well, if it's the government saying this, a government agency, that it must be true. And so obviously a lot of people were sitting and waiting for that correction to happen. Now, again, don't get me wrong, that could come in 2021, but I think it's certainly, it goes to show you how difficult it is to forecast, and to make a forecast with such certainty, I think is quite interesting.
Okay, so I mean, there's, like, as John mentioned, they're coming out of a hole. But how might the triple threat of mortgage deferrals ending, a second wave of COVID-19, how might that change things and bring things closer to CMHC's prediction as we head into the typically quieter fall and winter months?
Yeah, I mean, I still think it's very unlikely for the low-rise home market. Again, I think a lot of people have talked about the mortgage deferrals and the risks that present. But, at the end of the day, if you're a homeowner, you can't pay your mortgage, you're not just going to hand over your keys in a market that is competitive, where prices are rising 10% a year. You have equity in your home. You're either going to just list it and sell it, or you're going to refinance and take some equity out of it. So I don't think the mortgage deferrals are going to be a big risk. I mean, I do think the one risk that we're probably seeing now is a little bit more inventory on the condo market, and certainly that might be slowing down a little bit as we head into the next year.
Okay, Steve, what's your take on those conditions that I just pointed out with John?
Yeah, I think seems to be a similar trend in Vancouver as well, and obviously we're hearing this in other housing markets, that the market in Vancouver is kind of going in two separate directions. So you have like the condo market, particularly downtown, where people were obviously living closer to proximity to work. That market's, for example, the inventory in the Vancouver condo market is at a 6-year high. The inventory for single-family houses in Greater Vancouver is at a 6-year low. So we have two markets that are going in very different directions. The people that are driving the market right now, where everyone's talking about, housing demand, resurgence, pent-up demand, that's all coming from end users basically wanting to, that are spending more time at home and wanting to improve their living standards or living situation. Where we're seeing the huge pullback is really from the investor side. And that's obviously, it's a huge component of the condo market, and that's why you're seeing a lot of inventory coming on and very few sales, and that's putting some downwards pressure on the condo market.
Right. Okay. Steve, I just have to point out, you said the magic word, pent-up demand. I challenged everybody to not say that word, otherwise you have to do a shot. So this is waiting for you after we're done. After we're done, not during, of course. But it's almost an unavoidable word. I'm only joking. Pent-up demand just seems to be the name of the game when it comes to these markets. Okay, let's speak of markets. Let's move on to local markets here. John, your specialty is Toronto. You're based in Toronto. You dig through the data all the time. Okay, so here's sales and price data from TREB. Sales were up dramatically from last year. Prices were up too. These are numbers, but has the GTA market been as strong as numbers like this suggest, John?
Yeah, I mean, it has been more so, again, in the single family home market, and especially as we look into the outer suburbs. That's really what's been driving a lot of the demand, and we're seeing the biggest growth in sales is these really far outer suburbs. There has been a bit of a shift of people moving outside of the city. So, but even in the city, single family homes like semis, detached have been very competitive up until now. Condos have been slower, but we're starting to see a little bit of that heat wear off. Houses aren't getting quite as many offers now, and this is a little bit normal. I mean, we had this big surge in demand. A lot of people bought, fewer buyers are jumping into the market. There's more inventory, so it's a little bit less competitive right now.
Okay, so for Steve here, it's a similar story in Metro Vancouver. The REBGV board reported similarly strong sales numbers as well as prices. What are you seeing on the ground, Steve, when you take these numbers into account?
Yeah, so again, I think it's important to contextualize that you have two markets going in very different directions. Obviously, the investor condo-driven market versus the end user suburban single family housing market. So if we look at basically since the restart of kind of the housing market in June, basically, so June through August, we have 3 months worth of data there. Downtown Vancouver condos, the downtown core, there's been an 80% year-over-year increase during those 3 months in listings. So an 80% increase in new listings, a 0% increase in sales. Now, if you contextualize that versus the suburban single-family market, Fraser Valley detached homes, you have a 27%, just only 27% increase in new listings, but a 53% increase in sales. So basically, sales are dwarfing new listings coming onto the market. So that's creating very low inventory levels and multiple offer bidding war situations for these single-family houses. Whereas, again, the downtown condo market in particular is getting flooded with new inventory from a lot of investors just looking to cash out.
Okay. So, John, we've established these markets have been resilient. Besides, pent-up demand. What is there something else behind it? I mean, is it just cheap money? Is it a case of is it a case of the haves and the have-nots? Is it what's going on?
So, I mean, I think with Toronto, I mean, the key thing is to think about our starting point. And our starting point pre-COVID in February was an insanely competitive market. I mean, prices were rising. I think it must have been maybe 16 or 17% per year. So it was unbelievably competitive. Then we hit the brakes. A lot of people hit pause. And what ended up happening, and I think not many people predicted this, is that most of the people who were looking at buying homes weren't impacted very much by this slowdown. They kept their jobs, they just worked from home. They jumped back into the market. And on top of that, we had this new wave of buyers who weren't even looking for a home before COVID, who just suddenly decided they want to leave the city and move out of the city. So it really just created this demand shock. And that's really what pushed and accelerated the market in the 3 months. Like Steve said, it's very similar here. June to August was insane. And now we're starting to see that demand shock wind down a little bit. It's still a competitive market, especially for houses, but that's, I mean, normal for Toronto. And I think we're just starting to see that pent-up demand kind of unwind a little bit now. And we're starting to see a little bit of weakness in the downtown condo market, again, partly because people shifting and moving outside of the downtown core.
Okay, and so same question to you, Steve. It seems like the Bank of Canada has made it clear that to buyers, when we've got your back, or homeowners, when it comes to mortgages, rates aren't going up anytime soon. Tiff Macklin's not mincing words. Is it pent-up demand? Is it cheap money? Is it the things that John says? What are you seeing in Vancouver?
I think the big thing is I think Stan Druckenmiller probably put it best, one of the famous investors of our times, that liquidity drives markets, not necessarily the real economy. And I think that the Bank of Canada has certainly done a good job flooding the system with liquidity. If you look at their balance sheet, obviously Tiff Macklem coming out, you can look at all their mortgage bond purchases. That that balance sheet has grown exponentially, and that's given really what I like to look at and say, okay, when we go back in time, and as this pandemic was unfolding, so let's say April, everybody was concerned that the banks were going to tighten up, that they weren't going to lend money, that credit was going to basically seize up, because how could you practically lend money in an environment where you weren't sure who was going to have a job next week? What I've found interesting here in Vancouver is that for the most part, if you want a mortgage, like you can get one. The banks, given the economic environment, I think are quite loose. Considering the level of unemployment that we have in the country, considering the outlook, I think that they're lending money quite aggressively. I mean, we have bidding wars that are coming in, subject-free deals. I mean, you got to have a lot of confidence that your lender is going to be behind your back, and obviously, I think they are right now, and I think that's certainly helping with the fact that you have 5-year mortgages at 1.7, 1.8%.
Right. Okay. So we've established there's various conditions, various things going on, but there's various things going on with the different types of houses as well. I mean, you both touched on it a bit, but the detached market, John, it seems to be the hottest in Toronto, as well as Vancouver. But we'll get back to that with Steve. But what's going on with the detached market?
So again, the detached, and I think Steve made a good point earlier when he talked about how the reason why housing markets are so hard to predict is it's hard to predict human behavior. And I think when we talked in May, I don't think many of us were expecting this massive wave of people wanting a detached home, partly because they want more living space because they're working from home now, partly because they want a bigger backyard, partly to downsize their mortgage a little bit. So this big shift into these outer suburbs is really, again, like a behavioral shift that's largely in response to COVID. Like the hottest regions in the Toronto area right now are not downtown. It's not it's sort of these outer suburbs. It's Barrie and Innisfil, like areas that normally didn't get 15 offers on their offer nights, and prices rising 15 to 20% a year. These are the most competitive markets. And again, this is just largely due to just people wanting more space, working from home, wanting a little bit bigger backyard.
Are you seeing the same thing in Vancouver, Steve? I mean, Toronto is expensive when it comes to detached houses, but Vancouver is almost in another league. What's the detached market like, and who's able to even afford detached houses in Vancouver?
Yeah, it's a good question in terms of affordability. Certainly hasn't gotten any better. Since COVID, detached prices have been moving higher, which again, certainly I don't think anyone, even the biggest bulls on the real estate market, would have predicted that detached houses would have been moving higher. But here we are. I would argue that for the most part, they're probably up 5 to 10% since COVID. And it really is just a consumer shift in sentiment. I think that everybody, myself included, has looked at and assessed their living situation and says, well, it's almost like this glorified view of going and living further out in the suburbs and having a little farm to your own and living off the grid sort of thing. It's like everyone has this idea, and in Vancouver or in the province of BC, everyone's looking at these vacation homes on Vancouver Island, and well, I can just go bring my laptop, work remote, don't have to go to the office, so why don't I go live there? So you're hearing about these markets exploding higher right now. So again, I think it's really just comes down to a shift in consumer preferences, but at the same time, as John mentioned, pre-COVID, the detached market was already pretty hot to begin with. So we were already starting from a low inventory base. And then as COVID hit, obviously new listings dried up. So that pushed inventory even lower. And then as the market then reopened, you had this kind of wave of take another shot, pent up demand. And that, obviously, that wave of buyers that were coming in, they were coming in at a time when there was no inventory to begin with. And so now if we look at the picture today, the latest data as of the end of August, If you're looking for a house in the greater Vancouver area, sub $2 million, which is basically the limit for locals here, sub $2 million, there's less than 3 months of supply for sale. So it's a very tight market.
Can anybody in Vancouver who doesn't have equity in their home, isn't already a homeowner, who's been in the market for years and years, or they've inherited, how can one possibly afford to live in Vancouver if they work in Vancouver, if they're not lucky enough to be in that situation, Steve?
Yeah, no, it's good question.
Like COVID has not changed that, and that seems like nothing can. We saw a bit of a pullback when foreign buyers stricter rules came in and mortgage stress tests, things like that, but it's still pretty unaffordable, right?
Yeah, I would look at most of these houses and say, for the most part, like the unfortunate reality is it's either A, you've had help, a wealth transfer from your family that maybe they're well off, or they're already on the property ladder, they've built up a lot of money that they can either A, pass down, or B, you're already on the property ladder to begin with. Maybe you bought a condo 5-6 years ago. It's gone up quite a bit. You then leverage that, sell it and move up. So you pretty much have to get into a single family house for most people anyways, you kind of already have to be on the housing ladder or have family backing you.
Okay, so we'll get a little bit more into condos in a minute, but first, so what about the people, John, people that aren't quite there yet when it comes to moving into detached from a condo? So what about townhomes and semis? The kind of space you have kind of minimum need for a family with, say, 2 kids that like a 1-bedroom condo won't do. What's the townhome and semis market looking like, John?
So those are also quite busy in Toronto. So all those low-rise townhouses, semis, detached, all still very competitive. The semis and the townhouses tends to be closer to the urban core. So you got to think about, like, the further away you move from the downtown core, the more likely to have detached homes, the closer you are to the transit. So you do still get a lot of competition because people still want to be, in walking distance from different amenities to public transit. So still a pretty competitive market for semis and townhouses in Toronto.
Okay, and John, again, to condos, not so much, right? I mean, condos have not been keeping pace with detached, semi,
No, yeah, even the condo market. I mean, it's interesting. The suburban condo market is doing better than the downtown condo market in Toronto. So the downtown condo market right now, resale listings has about 5 months of inventory, which is quite a bit. I mean, I don't think I've ever seen that much in Toronto. And rental listings, there's probably just over 10,000 condo apartments units for rent in Toronto. And again, a lot of this is in the downtown core, just seeing people vacate their units. Again, a lot of this is just because people not wanting to be downtown, and partly because renters have been probably disproportionately impacted. So some of these people maybe just lost their jobs and moving back in with family because they can't afford their downtown units right now.
Right. So are we seeing a similar trend in Vancouver, Steve?
Yeah, we can talk about pent-up supply now.
Oh, that's a new one.
Yeah, there's a lot of that, and particularly again in the downtown core where most of the investors play. I mean, 50%, give or take, of the downtown market is investors. People renting from landlords. So that's a market where the landlords have pulled back, and so we are obviously seeing a lot more supply coming on, a 6-year high in condo inventory, and yeah, we're seeing some softness and some weakness in the rents as well. I mean, nothing dramatic, but there is a weakness in the rental market as well. And obviously, when you're an investor, you're kind of calculating all this, and you're saying, okay, well, what's my future appreciation look like? Obviously, right now we're seeing lower prices. At the same time, your rents are, I think landlords are almost anticipating higher and higher, ever increasing rents, but we're actually seeing a slight softness in the rents. So I think all these things kind of have to be weighed. And as an investor, you're kind of looking at it and saying, well, the risk reward doesn't look overly attractive at the moment.
Okay, so we keep hearing about this so-called urban exodus. I mean, we've touched on it as more people work from home. How much of a thing is it in Toronto, John? And what does that mean for renters? So, like, what I mean is, just to clarify, if people are leaving their the downtown core for and leaving their condos behind and moving to the burbs. Does that mean renters are finding more opportunity in Toronto?
So I think there's two segments of people who are behind this urban exodus. I mean, the first group are people who own their homes, maybe semis, maybe even condos, who are selling and moving to the outer burbs for more space, sort of moving to that detached. And then I think when we talk about renters, the people who are moving out of condos downtown are either moving to more affordable rental options, outside of the downtown core, or perhaps just moving in with family. And again, I think we're starting to see the biggest impact on condo rents downtown, partly because a lot of the downtown core has been shut down. I mean, if you go to the financial district, there's nothing going on. The restaurants, not particularly busy. So a lot of the amenities, a lot of the businesses, a lot of the jobs that were downtown have been lost and probably not going to be returning in the next few months. So a lot of the people who are renting down there, many of them may not even have jobs right now and are just moving and finding other options right now.
Okay, how about in Vancouver, Steve? I mean, it does sound like people are moving out of the city. How much of a boost is that for renters? I mean, the people like we talked about earlier that can't afford to live in Vancouver through buying, are they somehow finding rental opportunities within the city?
I mean, there's some softness in the rents, as I had mentioned. I think that we're seeing a lot more people as well move back home, particularly those younger millennials, right? That unfortunately, I think they've probably been the hardest impacted, in this labor market contraction. That you are seeing a lot of them pack their bags and head home and try to save some money. So that's obviously creating some increase in the vacancy rate and putting pressure on rent. So there's a lot of headwinds, I think, for the rental market. And at the end of the day, I think that the rental market over the past 4 years has gone up exponentially. So to see some pullback in that, I'm sure it's much needed. But as an investor, you have to also look at that and say, well, if my rents are lower, then I should be compensated on the purchase price as well.
Okay, so in terms of COVID and you guys doing your jobs, and sales have been super strong, but I can't imagine that it's business as usual in terms of showing homes, and certainly not in terms of open houses. There was a story in Toronto where things went terribly wrong and there was a case of COVID-19. First, should open houses even be happening, John? And just generally, how have you been able to do business during the pandemic?
Yeah, I mean, it is shocking that they're still even allowing open houses. I mean, it's something that we obviously don't need in this business. So certainly one of the things that they should be putting an end to, especially as we see a second wave. But business has definitely changed a little bit. A lot meetings are generally done virtually. Offers, negotiations are all done virtually. So there's far fewer in-person negotiations. I mean, obviously, the only thing that they can't get rid of is actually viewing a property in person. But even that, buyers with right now, a lot of sellers and listing agents have really detailed virtual tours. So buyers are very selective about what they view. So they're not touring as many homes as they used to. So definitely things have changed in terms of the way our agents are working.
Okay, and Steve, real quick, I'm assuming it's a similar story for you as well?
Yeah, I think so. I think it's gone more virtual. I think that people are also becoming more comfortable in this environment. So, for example, like sellers and buyers are more freely going out and looking at houses. Obviously, you mask up and you take the necessary precautions, but it feels like people are more comfortable. That's why we're seeing more listings coming onto the market. I think that people are kind of like, okay, well, it's going to be here. We can take the necessary precautions. I think open houses are still very much limited. They are happening. Personally, not a huge fan of them, but they are still happening, but very, very much scaled back.
Got it. Okay, thank you so much for joining us, John and Steve. We'll be back next month and in the coming months to help you make sense of these unprecedented times. There's another drinking game word. Until then, be sure to keep checking in at Yahoo Finance Canada for all of your news on everything from stocks, the economy, real estate, and so much more. Thank you.